coming live to you from OptionsCity World Headquarters here in Chicago. My name is Patrick Gardner from OptionsCity, and I'm here with Ankita Roy, the Manager of Ag Commodity Options at the CME.
Hello, everybody.
As we get started here, of course, I think everyone involved should know a little bit about who we are, and we'll just set the agenda, and Ankita will start, talk about the ag options, the products, the volumes, open interest, etc., and also quoting electronic market making on those. And then we'll show you some visuals of how it's all done on OptionsCity Metro. And with that, I'll hand it over to you, Ankita, and you can go from here.
Okay. Can everybody hear me fine? Okay. So my name is Ankita Roy, and I manage the agricultural commodity options at CME Group. I'm going to talk a little bit about the agriculture options because if you want to make markets in these options, it's important to know a bit about the basics on these. So without wasting any time, I would go to the first slide. On your screen, you have corn volatility and soybean volatility. These are realized or historical volatilities of corn and soybean, and it has been fluctuating between 14 to 48% over the last year, which makes option trading very, very interesting. The reason these fluctuate is because of different kinds of macro factors, different kinds of USDA reports, acreage report, planting report, and so on and so forth, and mainly the weather reports. So whenever there is a big drought in Ukraine or there is a ban on exports, there will be some kind of a supply-demand imbalance. And this imbalance results in high volatility. And volatility in the underlying futures result in higher trading of options, resulting in higher implied volatility. We also have indexes like VIX on corn and soybean, and you can monitor that. It's not a tradable product, but you can monitor that while trading your options. The next slide talks about what is the electronic share of the options on corn and soybean with the pit. Now, traditionally, agricultural CBOT agricultural options have been traded on the pit. However, it's shifting now more towards electronic. Currently, we have close to 30% that trades on Globex, which is our electronic platform. Both corn and soybean have close to 28 or 30% pit share. And from the charts, you can see what is the ADV and open interest. I'm not going to spend a lot of time on the ADV and option and open interest charts because that's for your information. You can look at that when you get some time. But by far, corn options are the most liquid options that our CBOT exchange has. In agriculture, I should mention that because we also have interest rate options, followed by soybean options. The RTH hours are the regular trading hours, and the most liquidity would be between those regular trading hours that synchronize with the pit trading hours. During ETH, which is mostly Europe and Asia trading hours, liquidity falls, and there is a bit of crisis in the number of market makers who are surveying and monitoring those markets and putting out quotes. So I'll come to that later. Why don't we just finish the overview? And so we're going to talk about wheat options. Wheat options.
I think, Ankita, when we talk about some of these volume statistics and what the share from the screen or the pit, we keep a lot of statistics, so we get it from your website, but we keep our own graphs and stuff, so we can distribute those to anyone that's interested afterwards, and we can kind of show the trends of month to month, whether there's a growing or decreasing. Almost every product across the board, the CME is increasing percentage of the trades done electronically. I know we're looking at the wheat options right now, and they're 30% in 2012, and they were 10% in 2010.
Right.
So that's seemingly where obviously I guess the trend is headed, and I think that's why there's probably a lot of people interested in this webinar and how to market make electronically now as well.
That's correct, and it's because of the advent of systems like OptionsCity and some of the other features that we have within CME, like EOS Trader, and also the different market making programs, to some extent education, and just the flexibility of trading these options online, on electronically on Globex, because it's not possible to trade on the pit for somebody who is not really located in Chicago, right? So that makes a lot more sense, and that is one of the reasons why the option volumes have grown over the last 2 years. So wheat options though trade much less compared to corn and soybean, but however, it's one of our liquid options, and number of contracts that trade is around 4,500 to 5,000 on Globex. Soybean meal and soybean oil are popular options for people who do crush trading strategies, and they are not at par with the volume or open interest of soybeans. But these derivatives of soybean are popular, and there are market makers standing by and providing markets for these options as well. Okay. Sorry, so this is the slide on the meal and oil options.
You're talking faster than you're clicking the slides.
Exactly. Okay, so however, as Patrick mentioned, and also if you go to our website, you can find the information on ADV and open interest. As you can see from these graphs, it's mostly traded on the pit, the meal and the oil options. It's still catching up on Globex. I would say it's 10% on Globex, and the rest is on the pit. CSOs, or calendar spread options. Calendar spread options is something that was, I think, it was launched on agricultural commodities a couple of years back. And these are great ways of hedging calendar spread risk between old crop, new crop, or even consecutive months. And it depends on the value and the volatility of the underlying spread. One of the things is the liquidity of CSOs are not very high on Globex, and it's mostly traded on the pit. The reason being these are slightly complex options than outrights, and OptionsCity actually has a pricing model where you can use that pricing model to trade the CSOs. Isn't that correct,
Yeah,
Patrick?
that's true. We've definitely added them for a number of customers in both the grains and the livestock, and we've been able to generate accurate SKUs that reflect the pit traded uh, quotes as well. And I think we could probably do a whole webinar like this on the CSOs and pricing. And you're obviously from a quantitative background, but I think most people that are on this webinar receive stuff from us and the CME, and we're in talks about further doing more educational stuff in terms of the CSO. So it's something to stay tuned for both Option City and the CME.
Perfect. So calendar spread options are, commercial users. Commercial traders are very much in favor. They use this on a regular basis during times of high volatility. As you can see, almost 40,000 trades happen on corn or on soybean. The most popular option, I would say, is the NOV soybean CSO and the old crop new crop corn CSO. And of course, we have seen a correlation that whenever there is a high volatility situation between the new crop and the old crop, the volume in CSOs pick up. Imagine the situation now. Right now, I don't know how many of you are following the market, but if you look at corn new crop, that is the D's option, it's kind of depreciated. The D's future is at 520 because of the bearish USDA reports and other factors. And if you look at the market right now, the old crop, that's not that depreciated. So obviously the curves have inverted since the beginning of this year. The curve is in backwardation. And so if you want to hedge out your spread risk, your calendar spread risk, the way to do it would be using the calendar spread options. Weekly options. Weekly option is something we launched last year, and it has been very popular amongst the traders on the floor and the traders electronically. People love this because these are short-term options which expires every week. At any given point in time, you have 3 to 4 weeklies listed, and these, when expire, is physically delivered into the future, which is the nearby. And the reason it's popular is you can trade this against some key reports, USDA crop reports or major economic events. You can pay much lesser premium due to a very low time value, and you can make more money by using these options into your strategies. Some of the key facts, if you look at the details on the right, you will see that the USDA crop report was in the week of Jan 13th this year was launched, and then you have a following volume of 29,000 of corn options. So it's kind of a very popular way of trading risk, event-driven risk.
Seems like the weeklies have been a successful product across Globex. So the indexes, the treasuries, FX, they all have weekly options that people are trading.
Correct. Correct. They were the early adopters of the weekly options. Ours was launched last year, and ever since it has been very popular amongst the floor traders and Globex traders. People simply like it because of just being cheap. The option premiums are very low, and you can trade. You can have the same facility of holding the nearby future or trading against the key and major economic events.
You're saying the ag weeklies were the first?
Ag weeklies were actually last year, which followed interest rate and FX.
Gotcha. And then have we mentioned the short dated crop options? I think it's something I read about recently. I don't know if you touched on it entirely with the CSOs, but it's sort of in the same light.
Actually, that's a great point that you bring up, Patrick. The short dated options on new crop, it's not in the CSO bucket. What it is are these are short dated or short term options that reference the new crop, but they expire early in the planting and the growing season. So, for instance, let's say you have a May contract that expires end of April. It's a corn contract, so the new crop is D's corn. So it references D's corn future, but it expires much early, where you can use this to hedge your new crop risk. So it's great because now you pay a much lower premium. It's a great cost-effective way of hedging for commercials. And also, if you're a market maker, you can use this because it has unique profiles, the Greek profiles, to use this to hedge your Greek sensitivities. Say, for instance, you have a D's option, which has a much higher theta decay, much lower theta decay than your short dated option, which has a much higher theta decay. So you can use that to kind of take care of your risk exposures that you have in your existing portfolio. So short dated options, again, are not available right now. They are being launched on June 4th. So it's coming. It's coming on June 4th, and we are in the process of distributing marketing material, and everybody who's listening to this can find the specifications, the contract specifications. This is being launched for corn, soybean, and wheat.
Can you say the launch date again?
June 4th.
So it's coming up soon.
Yeah.
And I know that we've worked to have the prep for this already, and I think that the concept is something that I know we have some Eurodollar traders on the webinar right now, so they're probably already kind of familiar with the idea of these.
Right. The Eurodollar is slightly different because it references the mid curve, and this is different because it's an early expiration referencing the new crop.
All right.
So that's something that's coming up. And one more point, since you brought the point of the short dated options, is recently we launched a spread option between MJX wheat and CBOT wheat. So, MJX wheat, which is Minneapolis wheat, trades at a premium to CBOT wheat normally, and that it normally has a positive spread. So people love that spread details because of the different grain strains in the wheat. And it's kind of a popular way of trading, but now you have an option. And we are also launching the spread as an implied functionality on May 21st of this month. So people who are interested in trading protein spreads because of Minneapolis having higher protein content can use this option to trade that. Okay, so shall we move on to our next topic today?
Yeah, I think we're all on the same page contracts wise, some of the new stuff, and get into the quoting.
Right. And that's a good point because I'm going to mention that later. All these options fall under the same umbrella of the grain and oilseed options market making program. So before going too further out, let's take the basics and then I will talk about our market making and what programs we have and what are the things we can offer you. Electronic market making on agricultural options. That's a picture of Einstein where obviously he mentioned nothing happens until something moves, which is so true. You need to have a tick size movement, you need market moves every nanosecond, every microsecond, and you need that movement in order to make markets and make profitable strategies. So you must have heard about this term called Mascot. Now, Globex has something which is a mascot. The mascot message can contain up to 100 quotes on multiple instruments. It's basically a, a quantum or a big streaming of quote that can go at one time, and these belong to the same instrument group code. Now, CME Globex will reject any mascot message if the first quote is an invalid tag. So every single mascot has a tag 50 assigned to it, which are all technical aspects. You know, if you are a market maker, if you have a mascot session, or if you're looking to have a mascot session, you will be assigned tag 50s and all other details. If a customer submits a mascot with several quotes on the same contract, only the first quote will be accepted. The other quotes are rejected.
And the quote is, just so everyone's on the same, a quote is a two-sided market, right? It's both a quote bid and an offer for either a call or a put or both.
Correct. So the market making is basically providing a continuous two-sided market, a bid and an offer. And the best bid and offer, meaning the tightest spread at the fastest time, gets executed. So that's, and you can also provide a bid side only or an offer side only. In that way, you can take the directional risk, which you need to liquidate later.
So when you send a quote, you can just send a quote to buy calls, for example. You don't have to send a quote to sell calls.
If you just want to hold one-sided risk, then you can just provide a one-sided quote.
Okay.
But normally, the term market maker is provided to somebody who provides streaming quotes, continuous bids and offers at the same time.
Okay.
Okay, so the quotes are treated as atomic operations. If one side of a quote is invalid, then the full quote is rejected. The quotes can be submitted with either the buy side or the sell side. Each side can have a different price or a size. And the successfully accepted quotes can act as limit session orders. So, you know, Mascot is it's a big streaming package that one can send instead of using an order book where you have to point and click and just put in an order at a time. So that is the advantage of using the Mascot session.
So is there priority for quotes over orders, or the other way around, or is it they all enter through the same place?
It's going through the same channel because it follows the same trading algo. However, you have a lot of advantage if you can use 100 quotes at one time, at one given second, instead of using the order book, using point and click um, mechanism, which is kind of slow and might not result in an execution.
So it's the tricks in the message type for a quote that you're sending.
Correct.
100 quotes in just one message, and so
Exactly.
it's for speed.
Exactly. So, talking about the market maker mascot sessions, we should also talk about what protections we the Globex can offer you some protections, which we call the market maker protection coordinates, X, Y, and Z. These are something that are assigned to a mascot session before you can start mascoting. X is actually the number of new codes. It's not the number of executions, but the number of new codes that you provide. The counter is increased by one every time you have a new code. The next one is Y, which is the number of new executions. So because of the change in the bid or ask, how many executions did that fill? So number of execution fills is Y. And Z is called the protection counter. This is the quantity protection counter for every execution quantity to an instrument's bid or ask per mascot ID. And typically Z is much higher than X or Y.
Sure, and this is per mascot ID or iLink is you know commonly referred to, and typically people if they're market making for multiple products, they would have a ID for both, let's say, example, wheat and soybeans, so that they have different market maker protections. Correct?
Correct. So you can choose to have as many iLinks as you want. If a market maker wants one iLink to quote wheat and soybean, we can do that. We can turn the Globex codes for soybean and wheat or soybean and corn, and the market maker has to assign the XYZ protections that's that he thinks is feasible, and that is the protection that Globex offers. Otherwise, what happens is if you um, overdo the protections, meaning if you quote over the XYZ levels that you have chosen, you may be removed from the market, and you don't want that to happen because you want to be in the market in order to get the quotes executed.
Sure.
So
And so it's important to know that these are set by the market makers. And I think it's important to know that you can get multiple iLinks for different products as long as your quoting provider, be it, let's say, OptionCity, who does have the ability to have multiple iLinks installed. I know not every piece of software does, but this is something set by the market makers. In addition, OptionCity has market maker protections that we'll go into later that are more front end and configured on a more ongoing safety basis throughout a trading day, as well as every clearing firm is going to want to have clearing firm level protections, often in the form of position limits and daily limits.
perfect.
So there's several redundancies
Yes,
in this
yes.
area.
These are all protections that the exchange or the ISV is the front end system like OptionCity, that they can provide you for the protection to your quotes, to your execution. Mascot Governor. Now, Mascot Governor is the next important feature in a mascot session. What this is limits your ability to send messages. And the reason that is done is because CME has one of the best technological systems and the best execution facilities in the whole world. We are one of the top global derivatives house, and so we need to ensure that we don't inject any latency issues into our systems. So the mascot governor is more like a precaution. It's more like a governing body that ensures that you are not sending excessive quote entries or excessive messages. So let's take this example that we have right now. For example, let's say you create a mascot session and you have been allotted 300 quotes per second, meaning you can stream 300 quotes in 1 second. An evaluation period for the mascot governor is 3 rolling seconds. So 3 rolling seconds will give you the ability of sending out 900 quotes in 3 seconds. That's the evaluation period, and that is what it is set at right now. So let's take this example. Market maker sends out 1,000 quotes the first second. It's There is a reject that's triggered at 900 at the first second, and you are blocked out. So that's called the time out period for the next 2 seconds. You cannot send in any quotes if you trip the mascot governor, if you exceed the mascot governor. On the fourth second, which is again a new evaluation period, you send 100 quotes the first second, which is accepted, another 100 quotes the next second, which is also accepted. But on the third second, you send out 1,000 quotes. So what happens is the first 800 is accepted, and then actually the first 200 is accepted, and then the rest is rejected, which is called the timeout period. And the same thing happens for the next evaluation period. So you have to keep in mind that when you have a Mascot session and you have a certain QPS available to you, which we also call the bandwidth, you have to take 3 rolling seconds window and ensure that you don't cross that limit that has been provided to you. Otherwise, the system will block you out. You will be removed from the system from quoting.
And I know on OptionsCity, when you get a reject based on trying to send too many quotes per second,
Yeah.
that we have it set so it will pull all of your quotes so that you don't have anything not updating out there, and it'll alert you to it as well. This is something that's happening for our market makers repeatedly. We can say they're quoting too much or that they need to be allotted more QPS from you, and then I think you talk to them and we'll go into the different market maker levels and how much bandwidth or QPS can be allotted as well. And even at the end of this webinar, we'll show you some of the things on OptionsCity that we've built into our front end, making it so you can adjust and kind of control QPS and maybe minimize the amount without any risk that you're setting.
That's great. It's a second level of precaution actually on top of CME. Okay, so let's talk about some matching algos now. The CBOT grain and oilseed futures and options have a certain matching algorithm that it follows to execute the quotes that you're sending. The futures follow an algorithm called K algorithm, and options follow the O algorithm. Let's talk about the O algorithm first. It's called the threshold pro rata algorithm, and what this does, it assigns a top order percentage allocation. So say you put in an order, it's a 100 lot order. So first there will be a top order percentage which will be allocated. In case of option, the top order is set at 10. So that means if somebody enters the market with a very tight bid ask and the fastest order at 10, that gets executed. But somebody who is sending a 1 lot order is not executed because the top order is 10. And in fact, we're trying to change that to 1 so that everybody has there's no cap on the order book on the top order. So when the first top order is executed, then the resting orders, meaning the leftover orders, go to a pro rata configuration. The pro rata will take the timestamps into account, and after the priority is established, it gives you a volume cap. The residual quantity will go into pro rata, and the quantities are assigned to the resting orders at the best price based on their relative size of the market at that price. So in case of ag options, it's 60%. 60% goes to pro rata, and the rest of the remaining orders gets a FIFO. It's FIFO allocation, meaning 40% goes to the FIFO allocation. And the FIFO allocation is basically dependent on a strict price and time priority. That is how the quotes are allocated. And this is how options in agricultural world are assigned to market makers.
And I think there's, as far as the pro rata, I mean, that can be very detailed as well as getting into exactly all the priorities beyond time and quantity size. I think you guys make that information available as well.
Correct. So if you want to learn more about these, you should go to our website and look into electronic trading. I did put a learning site somewhere here for your benefit. So go to that link. It's called Advanced Functionalities of Globex, and you can read a lot about that, and that gives you the details. And the webinar here talks more on the basics and more on the the introductory part of it. So if you are interested in learning in details on the algos and how you can start your Mascot session, then go to our website and read about it in details. And the next thing I'm going to talk about is the algo for futures. The algo for futures is called a split FIFO or pro rata algorithm. It's called K. The way this works is it has a top order percentage allocation that will better the market, meaning the tightest quote, the fastest quote. And then there is a FIFO allocation to it, which is 40%, and a pro rata, which is 60%. The leveling, which you have as a bullet point, is not applicable for ags. So it's applicable probably for interest rate futures, but it's not applicable for ag futures. And we do not provide Mascot session for futures trading. It is only for options trading. That's something to keep in mind.
It's all orders, correct?
Yes. So talking about FIFO, the O algorithm that I just explained to you is true for CBOT grain and oilseed options, meaning corn, soybean, wheat, soybean oil, meal will all go through the O algorithm. But when you talk about livestock options, which is actually very liquid and trades around 70 to 80% on screen, follows a FIFO model. FIFO is first in, first out algorithm. It depends on a strict price and time priority. The way, if it is changed, if it loses priority, it will be requeued. And these are the reasons why it might lose the priority. The increase in quantity, the change in price, and the change in the account number. So if you change any of these factors, your FIFO will be queued in a different way. Otherwise, it follows a completely first come, first served basis with the first orders matched with the time priority and a strict price. The strict price meaning the tightest bid ask. Some of the other things that a market maker or a trader, electronic Globex trader, should be aware about are price limits. We have price limit for our CBOT options, and the way that works is whenever there is a price limit that is hit, trading halts. This is called a circuit breaker. So for instance, say corn options, they the price limit is 40 cents, by the way, and it's expandable to 60 cents. For some reason, there's a USDA crop report which is very bullish, or due to some reason, it hits the price limit of 40 cents, limit up or limit down, meaning it goes up 40 cents from the last settled or goes down 40 cents from the last settled. It hits the circuit breaker and trading halts for the day. However, if two or more contracts settle at that price on that day, then it is expandable to 60 cents the following day. And we have price limits for each and every product which are different. The price limit for wheat and soybean are different from corn options.
When it's the next day of trading, does that correspond with the electric market and as well as the new extended trading hours? Is it, at 9 in the morning Chicago time? Is that when it's opens back up?
Well, technically, with the expansion in hours, what is happening is the market opens at 6 p.m. every day, and it closes at 4 p.m. every day. So it's a good question that if how will price limits act? Will it act at 9:30 a.m. in the morning, or will it act at 4 p.m. in the evening? Technically, 4 p.m. is the next day business open.
Okay.
So I would say that the price, if it hits a price limit, limit up or limit down, and if two contracts settle at that limit price, then the next business day would be 6 p.m. of that day, which is the new business day.
So if limit gets hit and everyone goes home or leaves the pit, it's probably important for them to be able to electronically access this stuff at 6:30 when the market opens up. It may or may not be, of course, but it's something that people would want to be able to
Sure,
access that
sure.
you might
And
have.
that is the reason we expanded the R so that to increase accessibility, so that people can still access Globex and keep trading against any news or any macro impact that the crops are having.
Sure. It gives people enough time to get home as well, and then log into
Right,
their option city from home.
right. Okay, so coming back to the limits, the the limits is a precautionary measure which is assigned by Globex to prevent any abnormal market movement because we don't want our corn price to be extremely high. It is a trouble for producers. It's very difficult for commercials to hedge. So we want to ensure, we want to provide some protection, and this is in accordance to the CFTC rules and regulations. Price banding. Price banding is another feature that is there on Globex. So if you send electronic orders and if they're really erroneous, then we have something called price banding. An overly aggressive erroneous order can trigger a sequence of market moving trades that require subsequent cancellations. So there is a check which is called a price banding. For options it's dynamic. If you send something which is way, say it's way out of the money, but it is much more expensive than deep in the money option, then obviously something is wrong there. So you are removed, you're automatically cancelled. And this is a feature that is there as a protection for CME Globex so that this doesn't cause abnormal market movements at any time. So this is something that everyone probably knows that CME Group has partnered with the different ISVs like OptionsCity, and we also have our internal system for providing a request for quote. Now, request for quote is something that I want to talk about for a couple of minutes. You can trade outrights and listed options directly on Globex. However, if you want to trade a butterfly or a straddle or strangle or any kind of complex option, you have the privilege. If there is a trader who comes and creates this trade and requests for a quote using request for quote mechanism, then a market maker can respond to it. And that is how markets are provided for complex strategies or spread strategies. This is an important feature that we would want our market makers to have. Basically, it's something that market makers in the program, it's an obligation for them to have it. So, submit and view RFQs, trade outright, complex spreads, and view and trade user-defined spreads, view and trade and create delta neutral spreads. These are features that ISV should have before you can sign up with them. And Option City has plenty of
We do
these.
have all of them, but it is something to be sure to ask. Not everybody does, and we'll even show you RFQ responses on Option City in a few minutes here.
Great. So, uh, going to the next slide. This is probably the most informative and most important slide that you are looking for. This is the agricultural commodity options market making programs. Now, we have market making programs and we have just market makers for our agricultural options, including grain, livestock, and dairy. There are two categories of option market makers. One is primary. The primary market maker has to adhere to a list of obligations, like they have to spend a certain time in the market, they have to quote on at least the first three contracts, and at least 10 up and down strikes. They have to quote the bid ask size in a particular standard or in accordance to a benchmark. For example, for corn, it's 1 to 2 cents for the first 2 months and at the money options. So if you adhere to all these kinds of regulations and based on top competition, you would be in the market making program. And what are the incentives? So these are some of the obligations. We also have obligations like quoting at least on two of the following options like CSOs, weekly options, and responding to quotes, which I was talking about a couple of minutes back, RFQing. So there are user defined spreads and a market maker has to have this RFQ functionality to respond to these quotes. So these are some of the obligations, and we at the CME, we strictly monitor that if they're following these obligations in order for them to qualify for the top 10 slot and qualify for the incentives.
When you say the top 10 slot, does that mean there's 10 primary market makers per product? Is that what you're saying?
No, what I mean is there can be 20 or 30 primary market makers, but based on competition and based on a model that we have, which I'm going to talk about in the next slide, what we have is we provide fee incentives and we also provide bandwidth, which is quotes per second. So somebody who comes within the top 10 category typically has a higher bandwidth than somebody who does not qualify. Also has fee incentives, which I don't want to go into details right now.
Sure.
If somebody's interested, can contact me. So it has incentives which the other market makers will probably not have. And the other sector are junior market makers. If you're new to market making, you want to try out the waters. You want to have a mass quote session and start streaming quotes in the CBOT ag options or livestock options. What normally we would do is typically give you a mass quote session with some QPS. The QPS does not exceed 200. 200 normally it's between 75 to 200. And you can use that bandwidth to quote the number of months and strikes that you want to. And your rates that you pay are dependent on if you're a member or a non-member of the exchange.
Let's call it a non-primary. I think junior market maker is very emasculated for some people. Let's call it non-primary market maker.
Absolutely, if you prefer that. Non-primary, but no, they are market makers. Essentially, they are the ones who are providing liquidity to our products. And there are so many of them, and we really think that they are adding a lot of value because they have some niche capabilities. A mass quoter, or a primary market maker who is within the top 10 can probably just quote the first few months and just keep on streaming quotes. However, some of the market makers provide liquidity to our products like CSOs or short dated options or those products which are not very liquid, and that is very valuable to the exchange.
Sure. And I think the idea that everyone has access to mass quoting and providing liquidity for you, and the more you're willing or able to do it, then the more benefit you reap from it thereafter, whether it's in terms of bandwidth and ability to quote more, send more messages, and not run into quote governor, as well as obviously your pricing incentives. And I know for our customers, we've seen people go from the right side of the non-primary to primary over time, and even very quickly.
Correct.
And that's something that's, as you're starting to become a market maker, that's something that you discuss with Ankita, right?
Right. So if you're a non-primary market maker, or let's just say you're a market maker. So if you're a market maker, you want to specialize in something, and you make full usage of the bandwidth provided to you, and show us to the exchange that what kind of liquidity you can achieve with that bandwidth, and then you progress on to the next level, which is being a primary market maker. So I think we can go to the next slide now. This talks about how the primary market makers are ranked, and to be honest, the non-primary market makers are also ranked by this performance measurement metric. So what this monitors the market makers real time. It's a multi-linear factor weighted model. So it has 10 parameters that goes into this model, and each factor has a weightage. Broadly, the factors can be classified into four categories. One is trading, the second one is market coverage, market quality, and quote efficiency. Now, trading comprises of how many options are you trading? So what is your average daily volume? How many spreads, meaning the user-defined spreads, are you trading? How many back months are you quoting on? back months typically mean beyond the first 3 months. Market coverage is what time are you spending in the market. Typically, a primary market maker needs to spend a minimum of 70% of the time in the market. How many months are you quoting? Are you quoting 6 months out or 12 months out or just 3 months out? That matters. How many strikes are you quoting on these months? Market quality talks about the bid ask. How tight is your bid ask? If your bid ask is wide, well, you'll never get hit because it's very competitive, and it also affects your ranking. The book size, meaning lot sizes, how many lots are you trading? And how many RFQ responses are you responding to? The quote efficiency refers to messages. Now, I must tell you one thing, agricultural options at CME are not subjected to the messaging policy. The messaging policy is basically if you are subjected to messaging policy, if you exceed a certain number of messages, then you have to pay a fine. But agricultural options are not a part of it. It's exempt from that policy. However, we have very small weightage to the quote efficiency because we don't want to induce any latency. Number of messages and the message to volume ratio. So say if you're sending out 9,000 messages and you're doing two volume, meaning two average daily volume, that is ridiculous, right? That's a lot of load on our trading systems.
So you're not going to be able to fool the exchange into thinking that you deserve better rates or more bandwidth because you're quoting a lot when
because you're sending a lot of messages
and you're not
right.
actually trading. So you're keeping track of this on every variable,
right.
So there's no sneaking around.
Right. No, it's not just quoting. You're sending several messages, but you're not really quoting or doing the volume that you have to do. So these are all kinds of different factors in performance metric by which a market maker is measured. And if the ranking is between 1 to 10, then the incentives are provided. So with that, I think I gave an introduction and the basics to agricultural options, electronic market making, and I hand it over to Patrick here.
Yeah, sure. We'll go through OptionsCity and quoting on OptionsCity and try to touch on some of the things that we mentioned with Ankita. I know a lot of people on this webinar may have seen this already, and certainly if you haven't, we'd like to show you everything in much more detail than we have here, but we do want to maybe take some questions here at the end of the hour. And so we'll move fairly quickly. Quoting with OptionsCity Metro, here's just a look at one of our GUI screens and some of the futures prices at some point last week. And here's our main quoting page. We call it the OptionsCity City Market page. I'm looking at right here, you can see I'm looking at the August corn options. I can select in a tabular fashion which products I want to look at. Obviously, our system is good for market making. We talk about having multiple I-links, and you can easily branch out and manage and quote multiple products at once from the same GUI. It's very scalable, and we have even seen more people being able to add the less liquid options products, whether it's soybean oil, for example, and start quoting them and managing them because it's all right here in the same console. And we'll just go through. I'm looking at it. I have my strike prices in the middle with the at-the-money highlighted there. Corn 540 strike, and on the left I'm looking at over here my call market data, and I can see, if you look closely, I can see that the market bid is at 31 and offered at 31 and 7/8. I have my theoretical value inlaid in between there, that's between it, and then going out I can see the size of the bid and ask as well, and the columns with those 0 percentages, those actually automate and work as a heat map on OptionsCity and let you know if our values theoretical values are through the bid or the offer. It gives you an idea how the skew is moving a little bit throughout the day, and if you need to adjust things. Right now our values are perfectly centered mid-market. And then going out from there, you see your quantity of the bid and offer that you would be quoting. It's all based on edge from theoretical as well as some other advanced scripting and quoting techniques we have that we'll discuss in a minute. And then we see our size as well. You'll note that some of the quotes on the offers there for the in the money calls are in green, and that just denotes that you're matching the best offer up there, so it lets you know if you'd be on that best offer. Moving on, I mentioned quoting based on edge from your theoretical. So I open up this panel on the right, and I can quickly come in and change what I want my edge to be, both for the bid and offer of a highlighted or selected range of strikes or calls or puts individually, and I can quickly change the edge or the quantity and make those manual adjustments. Oh, excuse me. And then you see up here, it's as simple as once I have my settings in line and I see where I'm going to quote, I can click Start Quoting up here. And I hope you can see in the top left where it's highlighted. And we also had the concept of tick levels in here, which I'll go into more detail later, but there's sort of predefined quoting levels from what we refer to as your base edge that you're quoting from. If I click Start Quoting up there, I will see some indicators letting me know that I'm quoting, or in this case, a non-production, that my quotes are being rejected. But just again, a visual highlight indicator that's consistent throughout the whole OptionsCity concept. Additional quoting functionality, and I think even some of people who have used our system know about this, and some of this is new in the last 6 months or so, and there's some stuff on the way as well, but I wanted to briefly discuss those automated quoting based on delta. You can set different delta bands and have your quoting edge automatically adjust. Again, it adds automation and more work, or less work than you have to do throughout the day. I mentioned the tick levels a moment ago, and those are predefined levels, so I can start quoting at a level that is, say, 3 ticks wider than my base amount of edge that I like to quote for, but I can also have it automate and back me out to these wider quote levels and then even pull my quotes. And it's based on things that happen in the market or based on your own trading, whether it be an underlying movement. If it's a fast underlining, I want to be underlined. I want to be safer. It can be based on volume traded, number of contracts, and even if you're going to cross the market, it will let you not, publish those quotes. We also have market join functionality that's based on quantity that's out there. If you're willing to step up and join a certain quantity and still get a minimum level of edge that you care about. And relatively newer to this market join functionality, you can also adjust your market join quote size as well. We have here, and you can see a little screen grab of it, a book depth multiplier that's for less liquid underlying products and even maybe some back months of the futures if you're pricing it off a back month future that's not as liquid. And it allows you to make sure for each option that you're actually going to be able to get the number of futures you need as a hedge, or even make sure to price it off of where in the book depth there's more futures than you need, or some sort of factor, as I can see in the middle column there, the U book depth column as well. And I can also do it based on delta is important for the next topic, the minimum tick multiplier. And this is something we have to help you manage your QPS. You can set it so you're only adjusting your bid or offer quote if there's that big of a move. So for your deep in the money options, your high delta stuff, it may be quoted wide, and you may not need to update your quotes based on every small move, and you can start managing your QPS this way. And then as well, we have a minimum quoting price, and that's only going to update your quotes if the underlying moves by this much. Again, it's going to help you save on bandwidth, and especially in active products, people found it useful. Not necessarily the ags, but some of the energy stuff, crude oil options, etc. And I said we were briefly going to look at our RFQs. Here we can see our exchange request viewer on OptionsCity, and what you can notice, so the most recent thing when this grab was taken was a 1x2 for the June beans. Put 1x2 was requested. No one had responded to it and made a market for this one yet, but if I look down the list, I can see other markets that people have made for these. And this window is set up specifically on OptionsCity, so the new ones come in at the top. So this This one was this RFQ came in at 12:58 and 18 seconds the day that this was taken. And then I can also, little effect there, I can also, for some of these, click on my theoretical value and adjust a quote. I can do it with respond and start quoting by hitting the respond button you see all the way over on the right, or I can bring up this window, make sure I adjust where I want my quotes to be and my size, and even for how long I'm going to quote it. Some of the stuff someone just wants to trade it right away, then you don't want to leave a resting, albeit resting, it's going to update with your theoretical value as it's generated on your server, but you give them a show and then you're not publishing it anymore, and so I can have it back out after a certain number of seconds. And that's just a quick view of some of our quoting functionality without really discussing network architecture is something, for a different webinar, something we've discussed before. But I do have Ankita and I's contact information here. We'll see if we have time for a couple questions here. We'll check. Both our contact information is here. If you know someone that wants the webinar, we will have a copy of the recording available. Let's give us within a day or two, but that'll be available as well. And we wanted to put a quick plug in for an event that OptionsCity is holding next month at the Hilton Chicago. It's an Algorithmic trading conference. If you heard about this webinar through our social media or direct email campaigning, you will probably hear about this as well, but you're certainly available to contact our marketing person, Sarah, in regards to this as well. We have a generic disclaimer here. And Kita, is there anything you'd like to add? We can see if there's any questions out there. I don't see that there are. If anyone would like to ask something, we can go ahead and see that, or we can end the webinar now. Yes, here we are. The presentation, it seems like we have a decent amount of questions. The presentation will be available online in the future. How does one get the corn VIX or the soybean VIX? Is that information published by the exchange?
That information is published by the exchange. If you have Bloomberg, the code symbols would be CIV and SIV for corn and soybean respectively, and you can find out the corn and soybean VIX.
Okay. Do you need full membership to execute covered trades?
The membership is only referring to what fees that you pay. You don't. It's not something that is relevant to covered trades or non-covered trades. It's basically you can do pay a non-member rate and do different kinds of spread options and covered trades.
Okay. And we talked about the rankings. Are those done daily or monthly?
The rankings are done on a daily basis, but the market makers can view it on a monthly basis only.
Okay. And as far as becoming a market maker, someone's seen this and they're interested in market making. Generally, you can talk to the exchange and Ankita about the process and some things we've discussed today. But typically, you request a market maker session through your clearing firm or your FCM, correct?
Correct. So what happens is, if you're a trader and if you're a market maker, you want to start quoting on some of our options, you need to contact your clearing firm. The clearing firm talks to our global account management, and the customer, meaning you, talk to me, and there's an application for the process. The application has to be approved. When the application is approved, a Mascot session or an iLink is provided to you with the protections that I spoke about and with the QPS that I spoke about, or quotes per second. And once you have that, you can start quoting on the contract months and the strikes the way you want it.
Okay. And someone's asking about cost of execution through OptionsCity. OptionsCity is strictly a software firm where we're just letting you access through your own electronic trading privileges at the MERC. Our cost to you is a monthly software leasing charge, not a per contract execution charge. what is the bandwidth difference between primary and non-market makers. I think that's that main slide. You get more bandwidth as a primary, and the more primary you are, your bandwidth can go
Yes.
up and up.
That is correct. You know, there is no set rule. It all depends on your performance and the liquidity that you're providing to our options. It's kind of measured at the point. So there are no rules that a primary gets X quotes per second and the non-primary gets a Y quotes per second. But typically, a non-primary to start with gets 200 quotes per second, which is a lot if you think about it.
Sure, I haven't seen any new ones come in. Yeah, OptionsCity is not an options brokerage or introducing broker. We're strictly a software company. It's your own trading privileges with the exchange that allow you access to them. We just simply install our software, and of course, help you get plugged in. It's a server-based system for this auto execution and auto trading, combined with the tablet technology for trading the pit electronically as well as open outcry. Okay, good. I'm glad. I see we answered your question. I haven't seen anything new
Algos,
other than that. Oh, where are we looking here?
the first question. How different market making is for ag products than the usual options in terms of algos?
Yeah, that's a very generic question. I'm not sure exactly what that means. Both myself and Kita, you have our contact information, and anyone's certainly more than welcome to get a hold of us and ask us any follow-up questions. Of course, if anyone's interested in seeing a detailed demonstration of Option City, we're of course willing to do that, and we hope that some people in this webinar that they'll ultimately start market making or market make more. I know a lot of people logged in right now in Kita are currently market makers because I've seen the attendee list and maybe some questions. It's cleared up things for them, not
Sure.
only in the ag space, but across in the financial room and beyond, even the partner exchanges in New York, etc. So I want to thank you on behalf of Option City and everyone here. It's really a good deal for these traders to kind of have access and hear everything straight from the source, all this information. And don't have any more questions, and we'll shut this down. And thank you everyone for attending.
Thank you very much. My contact information is out there on the presentation. Please feel free to contact me. Thank you.
Bye.